This week, we'll talk livestock slaughter, and we're going to talk about the resumption of live cattle imports from Mexico. Welcome to the weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner. With us this week is ag economist Charley Martinez. Charley, it is great to catch up with you and see you.
Good to see you. It's been a while.
It has been, but we have plenty to catch up and a little surprise at the end too, and we'll talk about that as well. So we'll talk about reports. We'll talk about the announcement last Friday that live cattle imports will resume from Mexico. But first, let's recap another interesting week in the markets.
Yeah, so I think this week was one of the weeks I was monitoring pretty frequently every day just to see what was happening. But at the end of the week, market highlight side, live steer prices averaged $232.77 per hundredweight for the 5 market average, which is up $2.29 from a week ago and down $10.40 per hundredweight from a year ago. The August live cattle futures was up $4.50 at the end of the week, which it closed at $231.57 per hundredweight. And the August feeder cattle futures price was also up $2.28 from a week ago and closed at $346.60 per hundredweight. On the meat side of things, choice box beef was at $361.53 at the end of the week, which is up 29 cents from last week. Cash hogs were up 12 cents and sitting at $95.99 per hundredweight. August lean hog futures was down $4.07 from a week ago and sitting at $98.78 per hundredweight. And the pork cutout value was down $3.17 from a week ago and is sitting at $101.46 per hundredweight.
And we're going to talk a little bit about the market reaction and a little bit more when we kind of start digging into the trade from Mexico. Let's go ahead and talk weekly cattle slaughter, because this is going to be interesting to watch in the next 6 weeks once things start back up again, potentially.
Yeah, so on the weekly slaughter side of things, cattle slaughter for the week was at 407,000, which is down 4,000 compared to a week ago, and down approximately 26,144 head compared to last year. And year to date, we're sitting at 8.3% lower in terms of total volume. On hog slaughter, for the week, it was at 1.828 million. So 1.828, that's a tongue twister, down 31,000 compared to last week and down 20,811 compared to a year ago. Year to date hog slaughter is estimated to be lower, just shy of 0.5% at 0.4%. So, we've talked about it every time I've been on this year, especially on the cattle slaughter side of things. We're tightening and getting lower and lower in terms of just total volume of slaughter in terms of number of head. So again, another week of being on with you, and we're starting to tighten down the difference between this year and last year.
It definitely is interesting watching the fact that cattle are continue on the same similar trajectory, and hogs have been pretty much steady for the most part.
Yeah, it's going to be interesting as we get through the end of the dog days of summer on the hog side of things, and given some of the recent reports that we've seen, if we're going to start seeing that actually close, such that we might actually get a little bit more positive in terms of being higher compared to a year ago as we finish the rest of this year too.
All right, Charley, let's get into livestock slaughter numbers. And just a reminder for viewers and listeners why we track this and why this is important when we're thinking about the big picture, whether it's any potential growth in the cattle herd or thinking about beef and pork production as well.
Yeah, so this came out last week, but I know we didn't get a chance to touch on it here. But in June, the U.S. commercial red meat production reached 4.39 billion pounds, which is actually a 4% increase from June of 2025. So a year-over-year increase. Beef production totaled 2.11 billion pounds, which was up 1%. Despite tighter cattle numbers and lower slaughter numbers, it was only down that 1%. And the reason why is because average live weights increased by 39 pounds to just shy of 1450 at 1,447 pounds. Veal production also fell 15% to 1.7 million pounds. And the reason why I included that is because we started seeing this year veal production starting to pick up out of nowhere around that end of the first quarter, start of the second quarter of this year. So something I thought was kind of interesting. Pork production showed the strongest growth, rising 7% to 2.27 billion pounds, driven by a 5% increase in hog slaughter to 10.5 million head, and a slight increase in average live weight to 289 pounds, which is up 3 pounds from the previous year. And so, as we just mentioned, we're starting to close that gap in terms of the difference between last year and this year in terms of total hog slaughter. This last month in June, we saw it really ramp up. And so, as I mentioned earlier, I think it'll be interesting to watch the second half of this year to see if we actually end up producing not only more pounds of pork, but also slaughtering more hogs in order to get to that number.
All right, Charlie. Let's talk live cattle. I mean, that's the news of the week, right? Happened late in the day last Friday. So after the close, when markets reopened Monday morning, they not only digested a cattle inventory report, cattle and feed numbers, and news that the USDA has intentions of reopening the Douglas, Arizona fork to live cattle imports from Mexico. There's a lot of things have to happen in the next month for that to come to fruition. But as producers are preparing for that, what are some things that they need to think about when we think about, one, what this does in terms of supplies, the type of cattle that are coming in, and honestly, what those feedlots in that part of the country have needed for so long?
Yeah, so I think we're at a time now where this phased opening or reopening of the border, it comes at a time where we really haven't been in a situation. I know we've had phased openings. We saw it last year, but I think we're at a different time and point now within each respective supply chain. And what I mean by that is, as you mentioned, Mexico has put a little bit more infrastructure into the feeding side of things for those animals on that side, as the border has pretty much remained closed, except for a couple of stints since November of 2024. And so we're going at almost 2 years now where folks had ample supply of cattle. They started building infrastructure, started harvesting their own animals in Mexico. And as we have this rephase opening, when it was announced, I got a couple of calls from producers. And one of the things that we know we can hang our hat on is an overreaction. One way or the other, the market's going to overreact. There's plethora of reasons. It could be some resetting of positions by certain stakeholders, but it also can be just when the market gets information, it's going to have a reaction one way or the other. Whenever we see a phase opening, we know that price is going to react down, and when we have a closure, the reaction is to overprice the market, and then we end up going through a couple of days where it fizzes out and kind of comes back to what reality is. And I think we saw that already this week. If you look at the fed cattle side, the August contract as of last week was at 227. And then when we opened and we closed on Monday, it went down to 225. And then as we sit here today, it's at 231. If we go a little bit further out to a February contract on the fed cattle side of things, it closed at 223.75 last week. And then we opened up and we closed on Monday, and it closed Monday at 217.73. And then that actually closed today at 226.88. So we see in both of those nearby and a further out contract a decrease in prices. And then not only did it rekindle itself, but also went past and went above the previous week's closing. So we see that. Same story on the feeder cattle side. I took a peek at the August contract, and last week it closed at 345 and 32 cents. At the close of Monday, it was at 338.25, and then today it's at 348.03. So on that front itself, we saw the overreaction down, and then we pulled back, and then we went past it. And so I think that's something that we can anticipate as we go. One of the things that I still would kind of not put caution, but something to think about is, if you're a producer, think about those LRPs, those policies, because if you have them in place, and it helps with risk mitigation, number one, but number two, it helps in the events like this. We kind of know that this talk can happen, whether it's opening or closing between the two countries. Risk is something that is known that can happen, has a known probability. We know that it's not zero of this opening and closing, and so that gives some stability or risk management opportunities there. I still think, when we say we have these phases of the opening. We can either assume that it's going to happen, or we can assume that it might happen, or we can assume that it's not going to happen. There's basically three things that we can assume there. But the question is going to be, does both sides agree on the protocol and how is it going to work? I do tend to believe that we will have a protocol on both sides that both sides agree on, just because we had seen it last year already in action. But now we have already, areas within Texas that has some outbreak of the New World Screwworm or surveillance occurring along the Texas border. And then I think the question becomes what comes across, right? As we get into the fall, that's usually historically when we would bring in the most of the Mexican cattle in a given year. And whenever we opened up last time, we did have some volume, but it was nowhere near what we historically had seen. And one of the reasons why is because they were retaining them more in Mexico because they had already put so much money into them and trying to get them fed up and processed over there. But also, I think there's some hesitancy in terms of, okay, let's commit, and then we do the process, and then it ends up closing again. And so I don't think we're going to see the volume that we normally would see. I don't think we'll see that this year if we do open, and whether it is simply because we only open up Arizona so we can't bring in the total volume that we normally would bring in, or let's say we open up all ports. I still don't think we'd have the normal volume just because of the infrastructure that's built on the other side already because of what's happened. So it's going to be interesting to see one, the size of the animals that come. Is it going to be lightweights or heavyweights? I would tend to think it's going to be more lightweights than heavies. But also the amount that comes through. If it's just with Arizona, that's really going to restrict and bottleneck the amount that can come in and kind of put a limit there already. If we open up a Santa Teresa, for instance, where we historically would bring in 500,000 head through that port, I think then we could really start talking about volume and getting back to somewhat what we used to be at. But I still don't think we're going to be at the capacity or the limit that we would see normally, just because of the business that's already kind of been put into place on the Mexico side. I do think that also, if we think about that, that's going to have impact on the things that we just talked about, like livestock slaughter, the monthly livestock slaughter reports. If we have an increase in supply, does that mean we end up seeing lighter weighted animals at harvest now because we don't have to offset the tight supplies with the heavy weights? Does it mean that we still just keep business as usual with the slaughter weights and we get these Mexican cattle up to that and slaughter them, which would help with total beef production? I think that's going to be things that, not only will we have to wait and see, but I think one of the biggest signals will be the discounts and premiums for those animals by the packers whenever it's time for those animals to come. But there's still so many nuances to this phase reopening that I think there's a lot of checkpoints that got to go with the protocol, the type of animals, and then the number of animals that come. I think those are things that we'll have to kind of wait and see. But we do know one thing's for sure. If it does end up opening, we will get some animals, which will help increase the supply domestically for beef production, which should increase the total pounds of production. And so, maybe that gives some help to the beef prices from a retail standpoint. But we'll have to wait and see.
We talk about, and this is never a fun topic to get into, but packer and processor margins, right? Like thinking about that as well. And that's been a little problematic in recent weeks. So thinking about more cattle coming in, does that potentially eventually offset some of that as well? And does that make a more balanced picture for the economics of cattle and beef production being forward?
Yeah, I think, one way to look at that is leverage, right? Throughout the supply chain, you have cow-calf producers, the feeders, and the packers. And historically, over the last basically 2 years, the cow-calf sector has had a lot of the leverage. The feeders have had some leverage, but the packers have basically had no leverage. I think as we've seen some of the feeders go out and close because of the lack of cattle and the lack of supplies, that does offset some of that leverage from the packer or to the packer. I don't know if the volume that we would see come in from Mexico is going to be enough to really give a lot of leverage to the packer and really alter any of that margin. I think it kind of just helps it find a floor more than anything. Because at the end of the day, we still have risk management. We still have market fundamentals at play. We still got tight supplies. Even if we were to increase and bring in what we normally would bring in, you're talking about 10 to 15% increase in that supply from a domestic feeder calf standpoint. But again, it's going to depend upon what size of those animals that are coming in, because if they're lightweights and majority are lightweights, that really doesn't offer leverage immediately to the packers. It has to work its way through the system. I do, from a cow calf perspective, we've they that segment has had so much leverage over the last couple of years. Maybe giving up some, it might seem somewhat of a negative, but in reality, it's still really good pricing throughout the supply chain for feeder calves here domestically in the U.S. and the U.S. herd. And I guess the question would be then too, is this jolt going to have, or this increase of supply going to be to the point where people start thinking about rebuilding? I don't know, but it's one of those deals where I think leverage points is what we really want to pay attention to here. And I just, there's the cow calf has had so much leverage. I think giving up a little bit's really not going to really matter, quote unquote, so much. But I don't think it's going to be a supply amount such that the Packers gain all this leverage in the marketplace. I think it's going to be also one of those regional specific things, because we know the Mexican cattle, they find their way into that Texas, Oklahoma, New Mexico market there. And right now the feeders have lost a lot of leverage. And so they need some cattle, they need supply. And so maybe it helps, get right or balance out somewhat of those markets.
Charlie, one last question on this. How much does the timing of the border reopening, thinking about cooler temperatures, thinking about mitigating some of the risk of the wide movements as well, come into play here? And is this the right time of year to make that move?
Yeah, one of the things that we've talked about, or that you and I have mentioned, or industry has talked about, was we know that we get these cattle majority of the time in the fall and in the spring. By us having this phased opening by the end of August, and we get into the fall run, it allows those animals to kind of go to their normal marketplaces that they would have normally been going to. So it kind of helps alleviate some of that, and kind of efficiency within the supply chain. It helps with that. And I do think if we bring in those lightweight animals, it allows, as we get into the cooler temperatures, it allows for some of that to happen. But I wouldn't say that the weather's the biggest component. I think it's more of the fact that that's time of the year, seasonality wise, when we would bring in these animals. And I think it helps both sides from a business standpoint be it more efficient. I also think, if we think about New World screwworm, and whenever when does it, kind of quote unquote subside? It's when we get to those cooler temperatures. So the panhandle, for instance, might get there, end of October, early November. And by that time we'd be within, 2 months of opening back up, and maybe we can get some cattle up that way, or, wherever they end up going. That could, come into factor or come into play. But I think it's more of the seasonality of when we bring those animals in is really going to be actually beneficial, just because of the efficiency of both sides know from a business standpoint what to expect.
All right. Last thing this week, we've been talking in recent weeks, diesel prices. We tried to blame Kenny for like his 3 consecutive weeks and fuel prices ticking higher. That has not stopped, even though Kenny has not been on for a couple of weeks. It continues to be an input cost that I feel like is one that the producers just weren't thinking about when they were doing budgets and thinking about their costs for 2026 when they were making those assignments. And it's not, we're not seeing relief at all.
Right. I think, one of the last things I did, for the University of Tennessee, was I actually did a market outlook, and now we were talking about the interaction of diesel and fuel and impact on pricing, and we see that. But right now, diesel this week is at $5.35, which is up from $5.24 last week. It's up pretty substantially from $3.74 that we saw a year ago. Regular gas this week is at $4.11. It's pretty much same as last week, but still higher than last year when we saw prices of $3.15. And I think the biggest thing, as you mentioned, is from an input standpoint, that pricing is such a drastic difference than it was a year ago, that I think it would have been hard to even pencil that in when you were thinking about a break even on a group of calves, whenever they were calving out this spring or in the winter, if you're moving them off weed, if you had wheat. And so it's the loaded mile has definitely gotten more expensive. And I think it's one of the things that you point to and say, this is why we do risk management. This is why you try to buy when opportunities are there. If you're really liquid and you're really strong position from a cash standpoint, it allows you to have some opportunity there. But the loaded mile is expensive. The regular consumer, the average consumer around the U.S., it's expensive for us at the gas pump, and so all the way around, everyone if it's input, in agriculture, it's an input. If it's a U.S. consumer, it's one of the things that we need to get around and live, for day to day, and so it's all expensive right now from that standpoint. It was coming down a little bit ago whenever last we were on. And then this week when I was logging it, and I was just like, well, that was the good times about a month ago.
The good times are over. Just kidding. Uh, all right. You have a little bit of an announcement as well. You kind of alluded to it. You have a new role, and you are not leaving us at the weekly livestock market update. You will continue in your new role. Why don't you share with listeners and viewers what is next for Charley Martinez?
Yeah, so as I just mentioned, I let it out a little bit, and I said last things I did for University of Tennessee. But as of today, or I guess technically as of tomorrow, I will be the new director for the King Ranch Institute of Ranch Management. Still be doing livestock economics, meat markets, all that kind of stuff. But I'll have a new role, a new job here in Kingsville, Texas. I enjoyed my time at the University of Tennessee. It was an awesome place, but I did my undergrad here, and it's from a ranching beef industry perspective, this is one of the positions that allows me not to only have impact from the ag economic standpoint, but it allows me to have impact with the next the future leaders of the beef industry. As we have 6 students every year here, 3 are graduating next spring, 3 new ones are arriving right now. And for me, it's a dream job, and I'm excited to be here. But as you mentioned, I won't be going anywhere. I'll still be working with Brownfield, and it'll be fun. And that's why my background's a little bit different than it normally is. Some people might say, well, where's he traveling now? But this is actually my new home, my new office here in Kingsville, Texas.
Well, we're excited to see what you do at the King Ranch Institute. It's such a great legacy program, and we're glad that you're sitting with us.
Thank you. I'm glad I got to stay. That was one of the things I was worried about.
All right. Well, we will catch up with you in a few weeks. Charley, great to see you.
Good to see you.
So our weekly livestock market update delivered to your email box every Saturday. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.